Hi guys, welcome back to the channel. This is Pips and Profits, the number one store for profitable analysis in the forex market and also in the synthetic indices market. If you're just coming across this channel for the first time, you want to turn on the notification bell and also click on the like button and subscribe button because of the shorty, I believe you're going to get a lot of value out of this channel. And you don't want to keep this information to yourself. You want to share the link of this channel to your friends, to your family members, your colleagues, and those interested in trading the forex market. Having done that, I'll be showing you guys a very powerful um, trading pattern, a very powerful trading pattern that a lot of traders don't even put into consideration, but it's one pattern that actually works well, and it works extremely well in the forex market. And this trading pattern is called the Quasimodo pattern, right? It's a pattern that a lot of traders don't put into consideration, but it is one that is very powerful. And whenever it plays out in the market, that is, whenever it gets presented in the market, almost 80% of the time, the market does respect it, right? Almost 80% of the time, even more, the market does respect it. So this is the Quasimodo pattern. This is for a sell, and this is the Quasimodo pattern for a buy. Right? This is a Quasimodo pattern for a buy. Now, once you are able to understand this pattern and how it works, and you are able to spot it in the forex market or the synthetic indices market, trust me, you're going to elevate your trading game to the next level. You're going to have a better win rate, and a very good system to your side, right? You're going to have a very good trading system to your side. So how does this work, right? Now, this is a very simple pattern, but might be somewhat complex or might be somewhat hard to spot at first. But once you've trained your eyes and able to master how this pattern forms, trust me, you just stepped into another world of the forex market, another world in the forex market, and this world is called the side of profitability. Now, look at this closely. Now, this is how you want to see the pattern form for a sell. You want to see this pattern form like this for a sell. I want to see this pattern form like this for a sell. When you see a previous high got taken out, what is our previous high got taken out by this high here, and you see a very impulsive bearish move to the downside, taking out this low, right? This low that caused or that formed this high. Then what you want to do is you want to just wait. I see the low, this is the low here. So what you want to do is you want to just wait for price to do a retracement back to this high. Don't forget, we are trading the pattern, not the candle, not the candles around this bearish drop. We are trading the pattern. So you want to see price do what? The right shoulder, this right hand side, retrace back to this region, the left shoulder, right? And then you place your entry for yourself. And then you can just come and use your short, your short tool. It's your short tool. And then you want to use what? The new eye that got created as your stop loss region. What you use the new eye that got created as a stop loss region. And then just target the new low that got created, right? This impulsive bearish move to the downside, right? So you target this new low, and this new low will be your take profit. But don't forget, this eye created that took out this eye here becomes the region for your stop loss. Becomes the region for your stop loss. Sometimes the eye can be high or can be wide, right? The candle that takes out this eye here can be very wide. Sometimes it can be small. Depending on how the candle forms, that is where you want to use as your stop loss, because you want to be on the safe side. You want to be on the safe side. Now, if this eye here, that is the liquidity resting above this eye here, has been taken out by this eye, this new eye here, and then price drops to the downside to take out this low, right? It means this becomes our protected eye. This becomes our new eye, where liquidity hasn't been taken, right? But then we already see that we already have an impulsive bearish move to the downside, showing us that the probability for price coming back to take out this high, right? This impulsive move took out this low, and then giving us the probability that price coming back to this point to sweep this high would be low, right? It would be low. So we'll just use this left shoulder as our what? As our entry point, and then this new high created as our stop loss region. And then target this new low as our what? Our take profit region. Most of the times, you are able to get a 1:2 or a 1:3 risk to reward from this setup. And at times, depending on how big this candle that takes out this high is, sometimes you can get a very, very small stop loss region, as I said, depending on this candle or this high here. And sometimes you can get a wider stop loss, depending on which you want to use a lot size that won't allow you risk too much or lose too much if you eventually get stopped out. But then you can most of the time get a 1:2 or a 1:3 RR from this setup. Sometimes it can be more, sometimes it can be less, right? But in all, you are guaranteed to get at least 1:2 or 1:3 from this setup. So this is for the sell. So also it is for the buy. So also it is for the buy. You want to use this left shoulder here. So our left shoulder, drag it out like this. And then once price takes out this high here, after taking out the high here, the low here, follow this place. So after price has taken out this low, by this bearish move to the downside, price takes out this low, right? And then pushes to the upside with a very, very impulsive move to clear this high. Clear this high, right? What you want to do is what you want to wait for price to just retrace back to this left shoulder here, this left shoulder, and then you take your buy. I said, we are not using the candles. I'm not using the candles in this impulsive move to this upside for entry. We are using the pattern. We are using the pattern. So after price has given you this pattern, just target the next what? The next high created, this high. Target this next high created as your take profit region. And then, as I said, you should get a 1:2 or a 1:3 risk to reward on this move. So let's look at this on the live charts. Let's see regions where we got. This is the 500 index. Okay, awesome. Now look at, can you see a live demonstration here? Can you see what happened here? Can you see that we had a drop to the downside, we had a push to the upside, and we had another drop, right? And look at what happened next. We had a bullish move to this upside, we took out this high here. So can you see? Now, as I said, where would be our next point of entry? We're waiting for price to do what? Come back to this left shoulder here. And just mark this left shoulder out like this, and then use your long tool for entry. Don't forget the stop loss region is where? Here, this low here, right? This new low created to be used as your stop loss region. And look at what happened, right? Back to this high. But we just got a 1:1.5, 1:1.5 less than 1:2 on this move if we target this high, particular high that got created as our take profit. But don't forget the time frame you're also using this matters. If you are seeing this formation on the 1 hour time frame, then it goes to show that price should move further, right? It goes to show that price should move further. So with this, you can just target a 1:3, 1:3, or even a 1:5, depending on the time frame, right? But let's just target a 1:3 on this. So this is 1:3, and look at what happened. See that price eventually did what? Came to smash the take profit. Price did what? Eventually came to smash the take profit. So this is a what? Bullish Quasimodo on 500 index. This is a bullish Quasimodo on 500 index. I see how price played out. We got our break of this previous low here. Got our break of this previous low here by this bearish move, and then this high got taken out. So can you see this high got taken out? And then what we just do, we just wait for price to come back to this left shoulder and take our buy. Now let's look out for a sell. Let's see if we can get a sell or a continuous buy. Okay, I think I'm seeing a buy here. Same thing. Can you see? Same thing here. We want to look out for an example for a sell. Can you see? Price dip. Same thing. Look out this eye here. And then look. Just bring our long tool. Now, what we need to understand is wherever this presents a sell, don't be scared to take your trade, right? Don't be scared. That happen even in a trend. Just ensure that you follow what? You follow the pattern and just target a 1:2 or a 1:3. So this is a one. Let's look at a 1:3 here for 500 index. So with this, I'll be anticipating that price should keep buying at least, come and take out this region here and smash my take profit. So let's look at this to see if we can get a sell. Let's look at this to see if we can get a sell. Now look at this closely. Can you see this point? Can you see that we have a sell here, an obvious sell? Can you see we have a drop to the downside, we have a push to the upside, then we have a drop again. And look what happened. We have this eye taken out by this eye. And then this low, this particular low that caused this formation, this new eye here, got taken out also. So what are we going to do? Same thing. Just do what? Mark out this left shoulder here. Just draw this left shoulder out here like this. And then wait for price to do what? Just mark this and place our stop loss on where the eye that just got created, the new eye that got created. And then we target to 1:3. Don't forget, this is the 1 hour time frame. So this is a 1:3 or even a 1:5. But then the 1:3 is virtually is most of the time feasible. 1:3 always is visible. It's feasible, right? So look at this. We already have our what? 1:3 on this cell. So that's how this works. And it does work on all pairs. It works on all pairs, works on all commodities. You understand? So this is something that a lot of people don't put into consideration. They don't really understand that chart patterns are very, very powerful. Chart patterns are very, very powerful. So this is one pattern that I use most of the time. If I don't want to do or go through the stress of trying to look out for a particular candle that would hold or look out for all the smart money terms, I just look out for my pattern. And once I see that price has presented my pattern to me, what do? I just go in using my pattern and then allow the market play out, right? And then allow the market play out. So that's that about that. That's that about that. I believe with this, you can just do a back test on this and look at how well you can use this to your profit. Thank you guys for staying till the end. I believe you've been able to learn one new thing from this video. Before I go, if you are new to this channel or you want to see other people get the same value you are getting from this channel, I'd like you to click on the subscribe button. I'd like you to also turn on the notification and also you want to share the link of this channel to your friends, to your colleagues, to your family members, and let them know that something beautiful is happening on this channel. Let them know that they'll come on here and get value for their time. You'll get value for their time. Thank you very much, guys. This is Pips and Profits signing out. Until next time. Bye-bye.